Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond at the Contrarian Trader. Let's first go over what we plan on discussing today. First up is going to be, how did we do last week? How did we outperform this market? In fact, since the beginning of the correction. Secondly, where are we at with the updated website? I get a lot of questions with regards to the website. Where are we at with it? And we'll discuss that. Thirdly, we're going to go into comments regarding the elections. What will be the outcome of the election? What will be the impact on the market? Who will be the winners in terms of sectors? And who will be the losers? Then lastly, we're going to segue into best stock charts for the coming week, where we'll go over our traditional stocks that we're watching, whether they be continuation breakout trades, breakdown trades, extreme oversold trades, extreme overbought trades. And then members, after we get through best stock charts for the coming week, if you're watching this, we're going to go over all best stock charts again on the week ahead commentary. Because on the week ahead commentary, I talk about the overall market health. Where has the market been? Where do I think it's going? That's on Market Pulse Check. Then we segue over and into our positions. How did we do in terms of performance? How are our positions holding up? Will we add? Will we distribute? Lastly, we're going to do a deep dive into the multi-period charts of our best stock charts. So what does that mean? What that means is that we have a series of stocks that we're going to review right now. Some of them are going to be daily charts. Some of them are going to be weekly charts. But what we want to do on the week ahead commentary is talk strategy. And to arrive at a proper strategy, we need to go over multi-period charts. How do we look on a weekly basis, a daily basis, perhaps even an intraday basis? And that's what we'll be doing later on today on the week ahead commentary. So members, stay tuned for that. And to get the week ahead commentary, to get the current pricing that we now have on the website, you need to sign up now because prices are going up when the new website is launched. I have to do it. We're adding a lot more value, and I'm investing a lot in terms of technology, and it'll probably be one of the coolest trade management platforms out there. So it'll be a far cry from what we have right now. So if you can put up with the glitches on the current site, you'll see a lot of value once the new website is launched. Let's get to it. How did we do last week? Well, you can go back and do a search on my blog and just type in LOB. LOB was a symbol that I talked about back here. It was an extreme oversold stock. The markets were in free fall. I said, you know what? I don't want to go buying Google, hoping that it'll go up. I don't want to go buying Netflix. I want to buy stocks that have been in a correction for a while now and that are poised to bounce, to have a short covering rally, or if they appear to be value stocks, appear poised to move higher. And I talked about LOB, Live Oak Bank shares, back here when nobody else wanted it. And I told members on the week ahead commentary that we need to wait for the shares to hit support. What happened last week? They hit support. What did we do? We began buying. How did we know that the shares would rally? Back to the daily chart. We knew they would rally because there was a heavy short interest, a multi-day short squeeze. Now, I booked profits here on November the 1st, and I caught some flack for it because I knew there was a heavy short interest and the potential for a multi-day short squeeze. The problem is that we were up 10% on the trade. 1. 2, these markets, this correction is not over yet. I don't care who wins the House of Representatives or the Senate. This correction is not over yet. We may not make new lower lows, but I think that we will pull back and put in either a double bottom retest or a higher low, back to LOB. So you could see that, thank goodness that we did book profits, because while the next day we briefly made a new intraday high, we sold off and sold off hard, and we would have lost the vast amount of our profits. So the deal is with these trades, and I do these all the time. I've been doing them for years. You need to book profits when you have liquidity. And that was on November the 1st. So right here in this range, between 18.50 and 18.15 per share, people were fearing when they should hope. Up here, they were hoping when they should fear. So we booked a nice 10% profit. Other trades, Ferrocorp, daily chart. We saw bottoming action here. We had RSI well below 15, and we spiked higher. This was our line in the sand. This was our price target. I didn't get out at that level. I got out earlier, again, to take advantage of liquidity. Some of my members held on through. Congratulations, it broke out. I think we'll get a pullback and a retest of 18. Ferrocorp looking good. But just keep in mind, there's a reason why the shares have been in a downtrend. To think that this sell-off is over just yet, a little bit pie in the sky. You need to get validation, not on a daily chart, but on a weekly chart. And you could see that we bounced off of historical support. This is what we were looking for. We were looking for historical support before we got involved with the trade, because we knew that there were buyers at that level. How do we know that? Well, the charts. The charts make you smart. The charts make you an informed trader, because this support level acted as support back here in June of 2015. It acted as resistance here in December of 16. Support again in April of 17. A lot of history here. So the probability of the shares rallying on a short squeeze off of this support level was quite high. Nice profit. We booked profits, moved to the sidelines in a very volatile market. A 4% profit in only a couple of trading days. You compound that over the course of a year, makes for outstanding returns. Another position that we were long of, as we saw the markets begin to bottom, was the market. Because we knew that we had a couple of specialty positions on, meaning the FOE and LOB. But I wanted to buy the market because it was so oversold relative to its 14-day moving average that I knew that there was going to be a bounce shortly, because this was unsustainable. The market was sending us signals back here. We had bottoming action. Stokes were putting in higher lows. RSI was putting in higher lows. So we put on a position getting us long of the market using the TNA, which puts you long of the small cap index. It's a leveraged ETF. And keep in mind that it was only a short while ago where we were short the market, the S&P 500, using the SPXS. We booked profits quickly. I didn't enjoy this entire ride higher. But as the markets began to unravel, we were short of the S&P 500 as well as the semiconductor sector using the SOXS. And again, we booked profits here. We'll look to get back involved should the market stall out. But as it stands right now, I'm a bit neutral on the market in the short term. Not in the longer term, but in the short term. All right, so segueing over and into the update on the new website. We are through the wireframing, which is where you lay out the design of the website. We are through the graphics design phase. Now we're moving on to coding it. It gets sent out to a coder, and they code out all the pages. We're looking at a launch date, a soft launch date of the 24th of December. That may be a bit aggressive, so I'm using a hard date of, let's say, January the 2nd. But there's going to be a ton more functionality. You'll be able to receive alerts via text, email, a push notification, a mixture of both, your choice. Trade alerts will be updated real time, meaning the trade management platform that we currently have is going to be scrapped. It's very cumbersome. What it would be replaced with is a trade management software where the current positions are automatically updated at the time of the alert. You cannot send out an alert without updating the current trade positions, and that's always been a thorn in the side of some members, but that is going to be fixed. Also, as a part of the new platform, we're going to have stop points automatically as a mandatory field, and price targets, as well as updated commentary as to where I think the position is going to go. So very strong value coming down the pike. So take advantage of current prices. If you're a member and you're going to deal with the glitches on the website now, it'll pay off in the future because I have to raise prices. All right, let's get to the elections. So we always hear that the next up-and-coming federal election is the election of our lifetimes. We need to get out and vote, yada, yada, yada. All right, for the most part, it's a bunch of BS. This time, it's a bit different because we have, think about it this way. Think about Maxine Waters chairing the House Banking Committee. Think about Congressman Schiff chairing the Judicial Committee. There is going to be a circus of investigations and attempts to impeach the president, and that's all you are going to hear. So how is the president going to deal with a Democratic Congress, or at least in the House? He's going to cut deals. Remember, he's from New York, and those who are not from New York, this is a very, very liberal state, especially in Manhattan. And he's had to, for 30 years, 40 years, deal with politicians who are left-wing. And he's done so successfully. How do you do that? You cut deals. So to think that there's not going to be a deal cut with a Democratic Congress is nonsense. It's going to happen. He's a deal maker, meaning President Trump. So who's going to win? Chart number 1, healthcare. Healthcare is going to win. 2, alternative energies and natural gas. Natural gas setting up nice here. Solar. I'm going to go over these charts in a moment. Solar is setting up nicely. Now, what do you want to avoid? Defense. Ever since we've heard conversation with regard to the blue wave, you've seen defense really underperform the overall market. This is the DFEN, the Aerospace and Defense Leveraged ETF. We put in a high in October of 64.50, but only a few weeks later, we hit a low of $36 per share. Now, if the Republicans hold Congress, expect a rally in the defense name. And I still think that you'll probably see a continuation move higher on healthcare, but there's going to be a question mark next to the solar names because oil's so weak right now, and you need rising oil prices for the solar names to do well as well. Why? It makes them more cost effective because they're not cheap to install. All right, so now let's segue over into our focus stocks. First chart up, an extreme oversold trade, MDRX, all scripts. We have RSI at 14.18, double bottom setup forming here on SPXS. A massive gap down on Friday on massive volume. So while we may get a pop here or a move sideways, I don't think that the selling is done here. Maybe in the short term, very, very short term, meaning a couple of days, but I think we're going to get a continuation move downward. We are trading down below the 3rd standard deviation Bollinger Band in red, in short. The share price is not supposed to be there, so I would not be the least bit surprised to see a pop on Monday. Would I buy it? No, I'll move to the sidelines. I want to take advantage of a truly extreme oversold trade. I have a support level below that I'm eyeballing. We'll discuss that with members on the week ahead commentary later on today. The next chart up, another extreme oversold stock. This is CSV, Carriage Services, daily chart, RSI 14.92. We did flash a bearish key reversal, and this is what I expect to see on all scripts. We were down below the 3rd standard deviation Bollinger Band on Friday. We flashed a bullish key reversal, which would imply we're probably going to get a move higher here. Do I think the selling is over? No, I do not. I think we're going lower. Why? It's because we're rolling over here on SPXS. A. B, we have not hit historical support yet that I feel is sufficient enough for us to call a bottom. So members, more to come on the multi-period charts, meaning the weekly or monthly charts to identify where is our historical support. I don't know yet. We don't have enough information. We need to do more homework. But the probability, just as we saw with LOB, Live Oak Bank Shares, and Ferrocorp, our extreme oversold trades from the past couple of weeks, we did quite well by looking for those stocks where people are fearing when they should hope with this type of technical setup. So members, more to come later on today. The next extreme oversold stock, Freight Car America, RAIL, the symbol RAIL. Now, we are very oversold on RSI at 13.40, very attractive. We gap down on the first, the second, continuation breakdown. Do we have a support level below? We're not sure yet. We need to go and check out the monthly or quarterly charts. And if there are not historical support levels below, then we have to rely more upon the daily chart as well as the intraday, using either a 2-hour or a 4-hour chart to identify whether or not we've seen a bottom where we could trade off of. Now, here's a perfect case in point where the markets were sending you a signal. You had a clear head and shoulder setup. This is textbook. Left shoulder, a clear head and shoulder setup. Left shoulder, head, right shoulder. Here is your neckline. The break below 1557 should have had you out of these shares. Honestly, I would have been out here on this failed breakout, this bearish key reversal, and then a break below support. We do have the 50-period moving average, which is going to cross down below the 200-period moving average, folks. That's priced in. Don't even worry about this. Unless, of course, we rally strong prior to this negative divergence of the moving averages, I would worry then. Right now, it's priced in. Really, who cares at this point in time? The shares are being decimated already. All right, so to continuation breakout trades, weekly chart, GLNG. You can see that we've been putting in higher lows and higher highs on RSI. In fact, last week we broke out. Same deal here on Stokes. Higher lows, no higher highs yet, but we're close. We have broken out on price. Now remember that if the Democrats win the House, as widely expected, keep in mind that the shares have rallied a bit here in anticipation of a Democratic takeover of the House. So what will the price action be immediately following a Democratic win if that's the case? You may get a pullback on the shares. It sounds counterintuitive, but people are buying on hope. They will sell on the news. So just because they win doesn't mean that the shares are going to go skyrocketing. I do like this breakout, and I'm very optimistic about GLNG. I want to see how the price behaves after the elections. I'm not putting on a trade on Monday. I want to see how the shares hold up after the elections. Same thing holds true for the UGAZ weekly chart. This puts you long of natural gas. This is a leveraged ETF. You don't want the volatility, buy the UNG. We have a bullish reversal bar, a beautiful pennant formation forming. I think we're breaking out here. But again, I want to wait until after the elections to see just how these shares behave. And of course, who wins the House. Here's a chart of the UNG. Very similar price action. Poised to break out here. Very bullish setup. Honestly, I think that these shares are going to move higher, whoever wins the House of Representatives. I mean, this is a beautiful, beautiful base. And we are breaking out of a long-term downtrend. I think the shares are moving higher. Members, more to come on strategy. The next chart up, Advanced Auto Parts. Weekly chart, I'm anticipating a breakout here on Advanced Auto Parts. You've had 3 consecutive weeks of strong bottoming action at support. We've closed back above the, let's call it 164 level. I think that these shares are poised for a breakout. We'll go over the daily charts. We'll decide as to where and when we want to open up our long position. Stokes appear poised to hook back up. Good volume, 2 weeks in a row. So Advanced Auto Parts looking good as a long. Members, more to come. And that is it for best stock charts this week, folks. Again, if you're not currently a member, take advantage of current pricing, as we never raise prices on existing members when we make changes to our services. That's called value, and that's what we're looking to provide. And if you're not ready to sign up yet, that's fine. If you watch this on the website, enter your email address, get all my free analysis of the markets. If you're watching this on YouTube, please subscribe to my channel. Click that subscribe button, leave a comment. I'll definitely get back to you. Everybody enjoy the remainder of your Sunday and have a very profitable trading week. I'll talk to you soon.